Good morning, it's Harvey Jackson. USDA yesterday, there's some bullish signals for corn. Soybeans bearish with more cabinet members talking about the 12 million metric ton commitment. No document signed. I think it's just fluff, obviously, but might tick off some U.S. guys here by saying this, but whatever. Here's just a snapshot of the USDA. Corn is the only bullish one. It actually pushed up wheat into higher numbers of carryouts. The expectation was still getting bigger, but it moved it up another couple million metric tons, especially when you see Australia, Canada, Europe, everybody growing more crop. So let's just have a quick look at wheat ending stocks, and you can say, this is the USDA numbers and just how it's reflected, but I want to maybe just show what's going on here. You've had multiple years of decreasing ending stocks, and this year we've actually moved it up. This is including Durham, so they don't exclude it, but you've got 6 million metric ton, 6.3 million metric ton ending stock carryout, so that's going to move things up rather than the tight year that we had last year. So the United States corn ending stocks, this is where the bullish sentiment has come. You got the global ending stocks decreasing. Imports are at a good pace, and that's what they demonstrated. You can see the exports here making records. The canola ending stocks using the USDA data, not my data, again, but they got 12.75 million metric ton exports. They have actually still got a reasonable number for crush, and exports at 7.2. We're not at that pace. We're in the pace somewhere in the middle of 5 to 5.5 million metric ton exports. So we need to pick up the pace. I don't know where that's going to come from at the moment. But you can see global ending stocks is increasing. Who has ending stocks? The other note that I was talking to one client, he was kind of surprised that China has the ending stocks, because it's kind of felt that, hey, they need our product. Well, they are up there as a large producer as well. That's why they have some ending stocks. I expect this number to be bigger, honestly. With the numbers, like they even have this number a little bit bigger than the 21.8. But yeah, we'll have to see how this all plays out. The other point that they have a 1.5 million metric ton using StatsCan numbers. That number is probably too low. This is part of the title. U.S. trade rep shifts timeline again, and so it's not the end of February. Now it's the end of the crop year. So keep moving the goalposts. Maybe they'll buy 12 million if you put it by the end of next year. Here you are with soybean ending stocks, and you can see that is increasing as well. The oil, oil seeds are increasing in ending stocks, and you can see that's the number there. They leave the export outlook to China still in pace. The other notable news that came out, Argentina reduced their export tax permanently rather than just doing it on and off. So that's a good sign for the farmers down there. So it's, I think, in the range of 24%. Quick look at the weather. You can see that the storm did pass through Saskatchewan. Here's the active weather right now. It's in Manitoba and flowing across the Great Lakes. There is that atmospheric river storm kind of hitting Seattle, but it's creating some other flow through as well. Here's forward look of how many inches there will be on the ground as well. So currently, for the second day in a row now, it looks like we've got canola up again. We'll have to see how this all continues to play out. We've got some profitable positions that we maintained and got into. We'll see if it's just a wave analysis to go up. We also had the Canadian dollar actually retract a little bit, and that could be putting a little bit of pressure on there as well, but we'll have to look at that. Rapeseed actually had a really good recovery too, so these two pairings might be just kind of trading together at the moment as well. Soybean oil, a little bit of a rebound there as well. Soybeans now way below the $11 mark at 10.83 now, and continue to fall. Spring wheat down a penny, and your other wheats are down a couple of pennies. Your corn is down 3/4 of a penny at 4.54. Canadian dollar is down slightly today as well. So just a quick look at it. We had that drop, and it looks like we've got a little bit of a resurgence, but we'll see how this plays out. We've had multiple days where there was green when I'm talking early in the morning, and by the time we get to the end of the trade, it's red. So still holding on to those positions for sure. But when you look at the November, it looks like you've got a retracement value that's actually maybe responsible for some of it as well. European rapeseed, the down candle from the day before is actually almost eclipsed with the green candle that we've got going on there now. Soybean oil is still basically a grouping nothing sandwich, doing nothing there. The soybeans definitely have this drop that's happening, and the crude palm oil is taking sympathy from some of the other oils there, but it's down, not up, as inventories were accounted for, and it's putting some pressure on the market. So the Canadian dollar had this resurgence up, and it's pulling back a little wee bit here now. I would be looking at maybe balancing those U.S. deficits in that account, in accounts that have U.S. deficits there. So maybe something the RBC or other brokers could be looking at as well. The other dollar pairing that's of interest is the Brazilian, and that's putting pressure on soybeans as well, because it's going to make their product that much more competitive, and it already is cheaper. Even though they're at the end of their harvest, it's still cheaper. So have a look at wheat, and I've pointed this out. Most of these bigger pops all come from Russia, in one form or another, droughts and conflict, right? So Kansas, if it breaks through here, we're back to that kind of an area there as well. Same thing with the Chicago. If we break through right where we are, we're heading back into that direction. Although there's no more direction for the French wheat to go down. Corn futures still look supported, and if it can get above this 200-day moving average, it actually will be even more supported, getting back to some of those levels. And that's all I have for you today.